Good afternoon, everyone. It's Wednesday, 12 p.m., and we are having the real talk with
Peter Karlin
and JT. Peter Karlin in the house. Thank you, sir, for coming in.
Pleasure.
So the topic for this conference we're gonna have is gonna be basically the red flags, the issues, the bumps, and we will share some of our personal experience, real lifetime experience. You know, what bumps we run into, and how we've been really able to overcome them and solve them, that they didn't become a big issue and kill the deal, right? Because as you know, if you're not gonna resolve the issues, the deal dies, and guess what? Everybody loses, right? So, P, you want to start? You want to share one of your many?
Let's start with a house not appraising, right? House doesn't appraise.
So it underpraised.
So it underappraised, right? So you bought it for $800,000. It appraises for $750,000. The buyer obviously not happy that something that they're purchasing is undervalued. Seller not happy. Nobody's happy, right? So you have basically three options. And normally in the contract, it says that, or there's something to the effect that if the house underappraises, one of three things can happen. The seller, you can renegotiate a price, so they could split the difference, or one of them
meet it halfway.
They can meet it halfway.
Sort of.
They meet it halfway, or seller. I've seen all three happen. I've seen people meet it halfway. I've seen a buyer come up.
Right? He really loves the home.
Buyer loves the home. Buyer says, you know what? I see what's happening. And frequently, homes don't appraise because it doesn't get the comparable values, right?
That's a great point, especially in today's market when the prices they literally go through the roof pretty fast. You know, the appraisal they're really giving the old value, right? The homes they have sold a few months before. So that's old value, really,
old
right?
value 6 months before, not what's coming down the pike, right? Or the house has been upgraded with some amazing upgrades, but they can't. I've heard an appraiser actually say to me, I don't care if the house was completely, in gold, had everything in gold. I'm not going to give it.
I've seen it, the golden toilets, the faucets, and stuff like that. And you know what? It's a toilet.
Exactly.
If it's gold plated, if the diamonds around it, it's still just a toilet for the appraisal.
If the comparable sales aren't there to support the value of the property, you're not going to get the value. So, but here's the thing: a lot of buyers and sellers do this. Obviously, a lot of people understand this. So you might have a buyer. I've had a buyer that was willing to go up by 50% to meet the seller halfway, but the seller was willing to come down, but not meet the buyer.
Did the broker chip in?
No.
Many times the owner actually will ask the broker, John, help me out.
Right. And the banker, both of us, and I've done it, and he's done it. We'll.
Hey, Cheryl, how are you?
Where everybody sort of chips in a little bit. The seller concedes, the realtor gets part of their commission, the bank gives a little lender's credit, and then you get a deal done. So I've seen a seller not come down enough and not enough money, and there was a small gap, but the deal broke apart. I've seen where a seller was unwilling to move because it underappraised, because he said, no, this is I know I can get this. I'll wait. We'll break the contract, and I'll wait till we get it. And I've seen the buyer say, you know what? I want the house so much, I don't care. I'll come out of pocket. So here's what happens in that scenario. If the buyer wants the house, the buyer's got to come up with the difference between appraised in cash, between the appraised value and the sales price, right? So if the appraised value is $750 and the sales price is $800, and they agree upon $775, meaning $775, the buyer still has to come out of pocket. The bank's going to give the loan based on $775, right? The lower of the value, and then the buyer has to come up with the difference between the appraised price and the sales price. But now, frequently, I've done this as a banker. We changed the down payment for the borrower from a certain percentage, right? So let's say we change it from 20% to 17.5% to give them, and then shift that money, so that money now becomes available for them to give out of pocket for the
difference.
difference.
Gotcha.
So you
So as long as they qualify.
as long as they qualify, exactly. As long as the debt to income ratio is there for that, then you have no problem. Exactly.
And I mean, you see, there's so many different ways you can really sort of cook the turkey, right?
Yeah.
Some people like to fry it, some people like to bake it, some people like to roast it, right? Grill it maybe. It might be a little healthy way. But I mean, you cannot give up. If the appraisal come lower, there's so many different ways you can really go about it, right?
Mhm.
Just don't throw in the towel.
Yeah.
You know,
Yeah.
you can always get it resolved. The other way, I think, before even actually maybe adjusting the value, you can challenge the appraisal. And we've done it before.
Great
You know,
point.
we've
Great
done it
point.
before where
Great point.
the appraisal actually,
Great
he might
point.
be coming from Long Island and he's appraising a home in Queens, in the city. Completely different neighborhoods, right? He doesn't have the knowledge of the neighborhood. He doesn't have the comps maybe.
Yep.
And many times you can try to challenge the appraisal when actually usually brokers do that, you know, with the bankers, you know, helping us out. We run the comps, we get a good comps which supports the value, and we'll summit it out.
Now, sometimes the realtor
Yes.
has access to comps that the appraiser just either didn't have access to or they didn't see. And so you can, yeah, absolutely, you do a challenge and they say, oh yeah, this makes sense, okay, we'll go with that. We'll go.
The thing with that is, P, that many times the appraisals, and you know it, right? The appraisals, they don't want to adjust the value.
Yeah, they don't like, listen, who
I
likes,
think
who
they
likes
take it-
changing their work? It takes time and you're
Yeah.
also saying, oh, maybe I made a mistake, maybe I missed something. So it's two things, it's time and it's acknowledging that you missed something or you didn't pick something up. So yes.
Well,
frequently
what can you do as well? You can actually get another appraisal.
Yes, you can.
Sometimes, you know, you have to change the banker in order to do that. And I've done it
Yeah.
before,
Yeah,
but again, it saved the deal.
yeah.
So many times, you know, the seller comes down, you know, many times the buyer meets halfway, or actually buyer comes up with all the money out of the pocket. you
See,
know.
I can't do that. I can't, as a banker, say,
Yes.
oh,
Yeah.
I don't like this. Let's try another one. You know what? I'm not sure. Actually,
We got a
I'm
question
not
over
sure.
here. Oh, that's Cheryl. So Cheryl, actually, she's an agent in Texas, and she says, in Texas, buyer agents are being asked to put language in a special provision that the buyer will pay the difference.
Oh, wow, look at
in
that.
order to cap it.
Was that
we have,
Cheryl?
yeah, we have
Wow,
to pay
wow,
the
wow.
attorney to write a language.
wow, very smart. I mean, smart from the
Point of view of the
sellers,
seller,
from
yeah.
the point of view of the seller. That's smart. Now, right? I mean, that's how, you know. Then on the other hand, will the buyer's attorney and the buyer accept that clause? But why not put it in if you're on the seller side and the seller's agent? Sure, why not put that in? Yeah.
I think it was a great point. You want to add something to the appraisal once it's underpriced?
So
Is that
you
different
have
experience you
meeting, you have, and then you have canceling the deal, right? So if the two can't, well, here's Cheryl coming up with what they're doing in Texas, which is interesting, and that's a good point. Thank you, Cheryl, because if there's a clause that says something like that, or something that binds, that
buyer
binds
can
the
proceed
buyer,
with the deal.
or even there's a clause that says I guess there could be a clause that says, hey, if it underappraises, they split the difference as well. I mean, that's, I guess, a clause that can happen
I mean,
as
in
well.
terms of the buyer, interestingly enough, if the clause is in, the buyer really has to make sure that he has the difference. Because if the home
Right.
is underpriced and he
Right.
has a commitment letter already, guess what? He's just buying to buy the house right now.
True, but again, you can make, as I said before, if there's room in the debt to income ratio,
You can play with it.
you can bring down the down payment and increase the loan amount, and then they have that other money, which they're not. And I've had that done before. It's not like coming out with extra money. It's just you're paying down, and it's not in the loan. It's just. Not
So I
in the
mean, this actually is a very common issue, and so how could you overcome that?
Okay, so if you're really right, so you can, the realtor and the banker can go into their comp systems such as Geodata, MLS, Property Shark, right? There's a lot of different ways, and look to see if there's going to be an issue. Frequently I will have realtors that tell me, oh, I'm a little concerned. I don't know if this house is going to appraise. I checked the comps; they're not there. But if you're on top of your game, right, be proactive, right, and look up the comps before the appraiser goes out, so it's not like sort of a guessing game. And then on the realtor side, on the listing agent side, right, you want to obviously.
I think actually even before, submitting the offer,
Yeah.
you should check out the comps.
Well, that is something that I believe,
You
as
should
John
be.
does,
Yeah.
a good buyer's agent is going to do that before he tells his client, his or her client, to go ahead and purchase the house, right? You're going to do that homework for your client and say, you know what, this is overpriced. It's probably not going to appraise. It's up to you.
Do you have the money extra?
Exactly. Do you have the extra money if you really want
Absolutely.
it? And I've had clients who they don't. I have one client in particular. He doesn't care. When he wants a house, he'll over the asking price, and if it underappraises, he's going to pay. I mean, to a reasonable amount. But that's his attitude. If I want that house, and the seller doesn't come down a little bit, I'm going to go in.
That's a serious buyer. And I think he's also able and willing.
That's correct.
So we got another comment from Cheryl. I mean, Cheryl, we appreciate that you get involved. I call pending property listings and getting writing what they are under contract for and provide info to the appraisal. Not official, but something helps. Well, that's a great thing you do. In New York, actually, many of the agents, they're very reluctant to give the value, the price of the home while it's under contract, because they don't want to give it away. In case if the home doesn't closes and it comes back on the market, now they just told you, what price the owner would take. So there's a lot of liability issue in terms of that. So many agents, we don't really disclose the under contract price until it closes. So I would conclude that, Peter, that was a great point, because many times the homes, especially these days, they don't appraise. Mm-hmm. So if you really felt in love with the home and you're about to put an offer on it, tell your agents to run the comps. Really make sure what is the today's value of the home. So if you're paying over because you really like the home and there's nothing wrong with it, just really make sure you have the difference if it comes down to it. Okay. The other issue is, which I just experienced recently actually, it's an issue with a COO or no COO. You got that before?
Yes, sir. Of course.
So no COO.
And for those of you who don't know, we're talking certificate of occupancy.
Yeah, so certificate of occupancy, what determines if the home is 1 family, 2 family, 3 family, 50 family. It's not the Department of Finance, as most sellers, they do think and they hope for, right? Because on the Department of Finance, when you pay your taxes, they might assess a home being a 3 family, but it doesn't determine that legal status of that home. They might say it's a 2 family and they might tax you as a 2 family, but your home actually can be a 1 family, right? Mm-hmm. So
happens all the time.
Happens all the time, yeah. Right? The city, if you pay them the money, they willingly take it.
Yeah.
Even though it doesn't really belong to them, but they'll take it from you. So I have one deal right now where, as a matter of fact, the homeowner, he bought a home about 10 years ago. He bought it as a legal 2 family. He has a contract of sale saying it's a 2 family. They run a title. We get a title search. Yeah. From 2008, it says it's a 2 family, okay? But there is no COO. So now the buyer, when they're buying the house, okay, interestingly enough, and this is something very uncommon, because the title search, it should say the same thing. When you're running it now or 50 years ago, if it's 1, it should say 1. If it's 2, it should say 2. In this case, the new title search, it actually says it's a single family.
Whoa. So what was it in the title? So there was no CFO in the title. What was it in the title that said it was a 1 family?
It just say the home being built in 1925, 1927 as a single family, and it is a single family. Now, interestingly enough, in New York State, if the home is built prior, I believe, 1937, they haven't used, it's either 1937 or 1927. I should know.
We should both know.
But it's one of these dates.
And do you know why? Do you know why that day?
Well, they didn't really use it, and I heard, I don't know if that's true,
fire.
There was a fire.
Yes, this is what I heard as well.
There was a fire which actually burned down the archives.
Oh, yes. So
all the archives, they have been lost. So there is no COOs for most of the homes, right? So this home, it's an older home, as many homes in New York, okay? It was built in 1927, so there's no COO. There's really no proof, not a legal proof, if this is a 1, 2, 3, or whatever the story is, right? So now the buyer, they run a new title search, and it shows it's a single family.
Oh gosh.
Now the buyer is buying as 2. You're on the contract. Oh. That's a big issue.
That's an issue.
Right?
It's an issue for everybody. It's an issue for the bank. It's an issue for qualification for the buyer. and an issue for the buyer because the buyer is thinking he's buying a 2 when it's really a 1. How many kitchens are there?
Well, it's set up as 2.
It's set up
There's
as
2
2.
kitchens,
Oh, wow.
2 baths.
Wow.
It looks like a 2 family.
Wow.
You can't really tell if it's single or 2, but it's set up as 2. Okay. So now there's more issues to it, right? Because if the new title is saying, hey, it is really a 1, the buyer cannot buy it as 2. They would have to buy it as 1.
Right.
Now, but can the seller
Price
really
comes
sell
down.
it
Should come down.
as 1?
Oh,
Because
gosh,
it's
wow.
set up as
Yeah.
2.
You're supposed to pull out a kitchen.
You have to take the kitchen out, right?
Oh gosh, yeah.
So either, there's options, there's actually a few different options you can really go with this. Either take the kitchen out, okay, and sell it as 1.
Or
Just
do
a big
the
discount.
paperwork and get the, do the paperwork to get it as a legal 2 for the city.
So now, interesting enough, in this circumstance, what we are working on currently, because there is another way to go about it as well. Because he did buy the home as 2 family.
Okay, the old title company.
And we have the old title company.
Oh, terrific.
We get a search from it.
Terrific.
It actually stating it's a 2 family. So what can you do if there's no COO? You can actually go to the Department of Building and apply for a thing. It's called the letter of no objection.
No objection, that's right, indeed. I should have remembered that, but...
They call it, the attorneys call it LNO.
Yeah.
Okay,
Yeah.
we have all these shortcuts, and sometimes I don't even know, but it's a letter of no objection. Do you want to clarify what is that?
No.
Okay. Well, really, that's my type of the field. Okay. So I mean,
I should know, in all due fairness, I have used this before. I rather not speak about it because I'm not 100%.
That's why you got
sure.
me.
That's why I got
And
you.
the same way when it
And
comes
I'll
to
tell you what I
financing,
know and what I
have
don't
been
know. I
there,
don't mean to make things up. That's not what I do.
Hey, Elisa, how are you? Guys, if you do find this useful and you're taking advantage of it, please, and if you can hear us good, it's important because sometimes the connection is not really perfect. Give us thumbs up, give us some hearts, show us some laugh, laugh is laugh, right? And if you do find it useful, please share this. Share this with the people you really care about, okay? So, back to letter of no objection. So, what letter of no objection really is? It's basically a letter, okay,
From the city,
from the Department of Building.
Department of Building, saying
Okay.
we're okay.
We have no objection
Right.
that
You
this
wanna-
is a 2-family house, and you can use it as a 2-family house. Now the bank can give the financing for that home, and most importantly, the buyer is not gonna have any issues with violations from the Department of Building. Because as you know, in New York, the Department of Building, they're really cracking down these days, and they're very strict in the uses and legalities and violations and stuff like that. So everything really has to be done by the book. So we are going to the Department of Building, and we will simply apply
Oh, awesome.
for the letter of no objection.
Now, how long
And-
does that process take normally?
Well, normally it takes about 2 to 3 weeks,
Okay, not so bad.
which
Not bad.
which it's not as bad.
Now, do they have to go down to I'm imagining they have to go down to the property and look at the property and see what's going on. Oh, no.
They,
Wow.
they really don't.
Wow.
What they will do actually, you will submit the proofs with it, okay, whatever paperwork you have, and they will actually do their due diligence. They will go back and they will say, okay, when the house was built, okay, it was built this way, do we have a paperwork from it? Okay, are there some permits? Whatever was done.
Wow.
And they will
Awesome.
do their own investigation, and if it's okay with them, then they will give you the letter. Of course, there is no guarantee they will give you the letter.
Yeah.
It's just the way the city works, unfortunately, in these instances. But there's another option. The other option, which Peter did mention, actually, what you could do, you would have to file it and actually convert that home from single to a multifamily. Now, you would need to hire an architect. You would have to draw the plans, submit it to the city. You would have to get the work permit. You would have to get certified electrician, plumber to sign it off, get it approved. Now, that's a little bit lengthy process, and of course, that costs money. It takes about 2 to 3 months.
So can I jump
Yes.
in here for a second? So
Anytime.
I have a really interesting situation that piggybacks on that. And that is, I have a house. It's a legal 2-family, set up as a 1. It's a legal 2 set up as a 1.
So it's the other way around.
It's the other way around. Legal 2 set up as a 1. My buyer couldn't qualify to buy the home initially. He couldn't qualify to buy the home as a 1 family.
As a single, nice.
Right?
Okay.
So, and he also, at one point, wanted it to be a 2 family. He wanted to have it set up as a 2 family. So they have a loan.
So you wanted to buy it as 1 and then convert it immediately or down the line?
Well, here's the thing. Initially, he needed the rental income from the second unit of the 2 family to qualify for the loan. So here's what we were going to do. We were going to, I just learned this recently. This is so cool for my underwriter. If you go with a FHA 203K loan, which an FHA 203K loan is a type of loan where you can take money out for the construction or renovation of almost anything you want in the home and build it into the loan, right? But in this scenario, you could get an FHA 203K loan to convert it, to renovate it back to a 2 family, because I had a contractor in there as well.
After you purchase.
Before you purchase the home, before you move into the home, if you say you're going to do the conversion and you get all the paperwork and all the documentation and the permit, you show you're going to get the permits and you get a licensed contractor and you're going to get an architect and you show all these plans to the bank will approve your loan based upon it converting to a 2 family, giving you the rental income of the 2 family.
That's unbelievable.
Unbelievable, right? But lo and behold, it turned out that my borrower was able to get some gift money, so we didn't have to do, because it's also a more time-consuming and lengthy process to get you to the closing table. And the borrower wanted to close as fast as possible. He was able to get some gift money.
And the seller wanted to sell it as soon as possible.
And the seller wanted to sell as soon as possible. They were living in the home. They wanted to move to another place, I think in Florida. So anyway, so we ended up going with back to the 1 family. They qualified for the 1 family.
Did the buyer get some credit from the owner for that or no?
No, because the owner was like, no.
Because it was his issue of qualification.
It was his issue for qualifying.
Okay.
Great question. It was the buyer's issue for qualification, and that was the only way that at that time that we could see qualifying him. But it was so cool to know that you could use the rental income after you do the construction.
After you do it, when it's not even done.
Yeah.
So you say there's so many ways you can really go about it. So how can you really protect yourself so it doesn't become an issue? Not only check the Department of Finance when it tells you it's 2 or 3 or 1 or whatever the thing is, you have to really check the Department of Building. Now, sometimes it says on the Department of Building 2 family, B3, converted, 2 family, but there is no COO. So if there's no COO, and the owner still tells you, or shows you paperwork that he bought it as a 2 family, you still need to get the letter of no objection.
Yeah, very good.
Which it takes time, but you're doing it ahead.
You save the deal, and you
save the deal, and you really prepare for it, because it might become an issue. Maybe it's not multifamily. Maybe it's just a single family.
Yeah.
So guys, we coming to a close.
Oh my goodness,
that
was fast.
Unbelievable, right? Would you like to add something to it?
No, I think I think what we said before. Doing your upfront homework, right? Checking those websites that John said, checking your comparables, right? I guess that's been one of the takeaways from this half hour is, if you're working with someone, good realtor, good mortgage person, do your homework up front, do your research yourself, and see what you're embarking, the journey that you're you're about to embark into.
So really, Pete, preparation is the key.
To life, right?
Better be safe than sorry.
Yes, sir. Yeah.
So prepare yourself. You cannot never be over prepared, I think.
Yeah.
The more you are prepared for the purchase or for the sale of your home, the more you prepare yourself ahead of time, the really easier and smoother the transaction is going to be for you. So I hope you guys find this easy. Thank you very much for tuning in, and we are looking forward seeing you soon.
Can I just jump in?
Of course!
I apologize. If there's stuff that you guys...
I'm actually surprised you didn't jump in before.
I'm sorry. This is just a thought for John, because this is his show, and I think he does a great job in bringing different people.
But this is your show, guys. This is for you.
That's our show.
We are doing this for you
your
guys.
show, you guys. If you guys have recommendations or different types of people from different industries that you want to see, or different topics that you want covered,
yes,
let this man know. Because he knows a lot of people, and if he doesn't know them, he's got no problem
we'll
finding them.
We'll find them.
So yeah, definitely reach out to him and let him know.
Thank you guys for tuning in. Okay, catch you later.
Have a good week.
Bye.
Bye bye.